It's about getting to our customer. So, and at the moment, we still see a lot of value in having our branch network. It's still going strong. We have our own digital application, AlphaPay, which is Al Fardan Exchange.
We're never going to be entirely cashless because there are cohorts of people who will need cash for all kinds of reasons.
In terms of percentages, I mean, roughly about 15% of our business happens through our app, and we anticipate that will continue to grow. Most of the African corridors, we've had a significant jump in our cash to wallet, for example, business. Wallets are extremely popular in Africa. Within AlphaPay, for instance, you can send money to about 70 different wallets globally.
Oh, so it's a wallet to wallet.
So it's a wallet to wallet transfer.
I want to welcome you to the second season of Couchonomics with Arjun. Join us this season as we go beyond fintech and payments and embark on the journey into the future of financial services, a future which will be shaped by existing and new developments in technology and innovation, including and not limited to the likes of embedded finance, open banking, ESG, various versions of metaverse, decentralized finance, digital currencies, and other trends. On the couch, we're going to have the most influential and progressive-minded founders, executives, investors, regulators, innovators, and industry commentators from across the MENA region and beyond. Join us as we unravel a multitude of layers of the financial services industry and try to learn how technology will continue to impact the world that we live in. Couchonomics with Arjun is proud to collaborate with some of the most respected and innovative names in the world of payments, fintech, and technology. Ardian is a reliable end-to-end payment solution that provides innovation and flexibility to help businesses achieve their ambition faster by turning payments into a strategic growth driver. Get everything you need with 2U, a Saudi-based super app for delivery, mobility, on-demand services, and a lot more. 2U connects you to everything you need to enrich your daily lives by building an ecosystem across its end consumers, merchants, and reps. Visa is a world leader in digital payments with a mission to connect the world through the most innovative, convenient, reliable, and secure payments network to enable individuals, businesses, and economies to thrive. Jidea is a leading fintech and payment solution provider founded in Saudi Arabia, expanding rapidly across the region with established operations in UAE and Egypt. Jidea's vision is to empower merchants with the tools to start, manage, and grow their business. M2P pioneers next-gen fintech through innovative offerings across payments, lending, and banking landscapes. Their comprehensive tech stack powers end-to-end banking services, BNPL, customized credit cards, prepaid cards, and more.
Hello, everybody. Welcome to today's episode of Couchonomics with Arjun. Joining me on the couch today is someone I've been trying to get on the couch for a very, very long time. But he's finally agreed and he's made it to the studio. I'd like to welcome Hasan Al Fardan, who's the Group CEO of the Al Fardan Group. With that, Hasan, welcome.
Thank you very much, Arjun. It's a pleasure to be here with you on the couch.
I have to say, you said it, the couch, right? So, because I should say, welcome to the couch. So you beat me at it, and that's perfect. As long as the guests already know that it is the couch, which is actually the hero of the show, right?
Absolutely.
The couch and Batman,
the infamous
right?
couch, and I'm loving the Joker.
You're loving the Joker, right? By the way, there is no subliminal message out there with the Joker out there.
I'm not
right?
suggesting there is one.
Right. So. Hasan, I think you are, if I'm not wrong, the first group CEO leader of a large sort of money remittance exchange player from the region who's actually come onto the couch, right? I don't know why most people shy away. I'm not that intimidating. I thought I was a nice chap. But I think it'll be very interesting for at least the audience because, we do have an audience which goes beyond just the UAE. Mm-hmm. We have people from the region. Actually, it's a large group of people who listen to us from the UK and the India and other parts of the world, it'd be great to actually start with, and if I may say, the Al Fardan exchange side of it, because I know the group is quite diversified with a number of different businesses, but this is a fintech financial services show, so we'll stick to it.
Sure.
So I guess my question in this very long-winded introduction is, talk to us a little bit about the genesis of Al Fardan Exchange and, what prompted the family or the family business to make a decision, said, let's get into the exchange business.
Sure. My grandfather is the founder of Al Fardan Group as we know it today, and the group was formally established in 1954. We come from a pearl trading family, a merchant family, and obviously the UAE and Dubai being a regional trading hub. And my grandfather used to deal with various currencies, so we needed to come up with a solution to deal with all these various currencies. And so back in 1971, my grandfather applied for an exchange license with the Central Bank, and we are the first licensed exchange house in the country.
Were you?
Yes, we were. Yes, we were the very first license. And obviously, as the country started to evolve, and we started to see a lot of foreign migration into the country, people needed solutions to send money back home to their families. So the first actual remittance arrangements that happened in the UAE was between Al Fardan Exchange and the National Bank of Egypt.
Okay.
So I hear stories of my grandfather of how they used to carry bags of cash from the UAE and Doha at the time, and they would go settle their funds with Al Muzani Exchange, and then Al Muzani would ship that cash down to Egypt until we established our own direct relationships. So really, there was a lot of funds and a lot of requirements for people to send money back to their families. The services that we offer today literally impact the lives of millions of people. It's a safe, secure, and stable way for people to get money back to their loved ones. And that really was the start of the business.
That was the start of the business. No, that's interesting. And as you say it, right, it is arguably the leading financial inclusion tool that exists in financial services today, right? In the sense, as you said, millions and millions of people remit money all over the world, friends, family, or for whatever other reasons. And there are still some very creative ways of getting money across.
Yes.
I think those bagfuls and those duffel bagfuls or whatever they're called these days still does exist. I think there's still a fair significant amount of money which moves cross-border, which isn't necessarily moving, I guess, in a legit manner, if I may use that term.
The Hawala markets, they're there.
They're there. Let me take a step sort of away from it, right? Away from Al Fardan, because I'm going to come back close to the end of our conversation where I'm going to dig a little bit deeper into, what's Al Fardan actually up to now and where do you want to head to? But, we'll have a few questions woven in. I want to take a step back. If I look at the taxonomy of fintech, right, money remittance, cross-border payments, exchange is part of the wider world of the fintech,
yes.
Right? So let me just, as a commentator in the market, as someone who actually lives and breathes fintech in some form or the other today, what's your view on the fintech sector in the MENA region? Like, what do you like about it? What do you think is lacking? What's your perspective?
There's been a lot of VC funding, a lot of capital chasing fintechs in the region. Whether it's the UAE, Saudi Arabia, Kuwait, Bahrain, and a few other markets. North of the Arabian Peninsula. Initially, over the last few years, there's been quite a big focus on people blowing up valuations, with a view to exit. And many of these fintechs, I think, failed because they didn't really focus on the core offering of the business. You need a business that is actually fixing a problem for somebody or providing a solution for somebody, a business that is profitable, a business that is scalable, a business that you have the ability to add on to. This is why I think some of the a lot of the promising startups that were funded quite aggressively didn't necessarily grow to the extent that one would have anticipated. But having said all that, I think it's a very exciting time to be in the UAE market in particular. And when I look at a lot of the advancements happening with the local regulator, I look at the FIT, the financial infrastructure transformation program. I look at the new instant payment platform that's coming into the market. I look at the CBDC pilots happening with the regulator. It's a very, very exciting time to be in the market. And I think it provides a very unique opportunity for players like us to actually develop ourselves and integrate ourselves into this new infrastructure, and start to do the things that we want to do and we like doing.
So we're going to dig into all of those, right? I'm going to put you on the spot here. What do you think is currently lacking in the overall fintech ecosystem, or what could be better?
The infrastructure certainly could be better. Inshallah, very soon we're going to be having a very, very, very sophisticated local switch within our local market, which I think is really the platform and the catalyst for us to drive a lot of these systems. I mean, you can't really deploy a very sophisticated open banking solution unless the local payment rails actually support your business model. So I think once that comes into play, you'll start to see quite a significant push and advancement, because for us to invest into these products and to start putting capex and bringing in new technologies and new resources and new technical capabilities, you need to have the rails in place. You need to have the infrastructure in place.
Here's a moot point, right? So I have always called your, if I may say, category of businesses the original fintechs, right? Because there was a problem in the market which needed to be solved, or there was a need in the market which needed to be solved. You guys built products, services, solutions to do that.
Mm-hmm.
The vast majority of those products and solutions were underpinned by technology, and not just very basic technology, but fairly complex technology. Yes. At the time when it was launched, because it was multi-jurisdiction,
yes.
It was cross-border, it involved carrying people, it needed all the data, the privacy, the security, because it was carrying people's life savings. All of that good work, but you guys don't get, if I may say, your time in the sun in terms of the I guess the wow factor, right? You
Yes.
got these BNPL companies, you get, a lot of other payment players. Most of them are loss making, with all due respect, right? Some of them, I actually wonder if they're actually solving any problem at all. A very large percentage of them are Me Too's, because they saw something succeed in some part of the world. So someone comes and sort of does something here. Nothing wrong with Me Too's, right? So why is that the case? Like, why don't you guys get the attention from the whole ecosystem, including VCs and so on and so forth?
I think because we provide an essential service, it's not necessarily glossy or attractive in the way that you would look at other business lines or other, I would say, perhaps more attractive businesses. But I mean, when you look at a supermarket, you look at a hospital, you look at basic necessities, it's not really a glossy or attractive business, but we are providing something essential. Without having us in the market, there are certain elements of the economy, certain demographics that will struggle to send money back home. I think there's that element, but there's also the perception that this is a risky business and that it's highly regulated, and that sometimes maybe takes away some of the gloss as well. But we are almost operating like banking institutions. When you look at our finance setup, you look at our compliance, and us as Al Fardan, we put a very high significance on importance on GRC, governance, risk, and compliance. And also the MSBs globally typically are perceived very differently than I would say banking institutions. Non-banking financial institutions are perceived slightly differently, but still, I mean, we provide fantastic services, and in our core business, I think we are far better than banks.
Yeah, and okay, let's break this down, right? So I can't help but be a consultant, unfortunately.
Please.
Right? We've had a long cup of coffee, and I think you would have figured that, right? So and I am actually a cheerleader for you guys. So let's look at it this way, right? See, so you have a formidable business in terms of a B2C offering, right?
Yes.
And it's a business which is based on trust. Yes, it's commoditized to the extent that people are shopping for what is the cheapest way for them to send money from A to B, but there is a certain level of trust that exists because
Yes.
people are handing their cash over, right? And you're a very visible brand, right? You're visible whether it's online or offline, but there's visibility. On top of it, some of you successful players in the exchange business are well-established wage protection system providers, WPS, right? And if I do not know the number, but I would imagine that a very significant percentage of the population of this country in the UAE, and and this story can be taken to other parts of the region, are paid through these WPS mechanisms, right? Which means you have access to the SMEs. SMEs typically are the engine of any economy, right? So they generate somewhere between 30 to 50% of the GDP, right? And they're perennially underserved by the more formal sector, if we call them bankers or banking and so on and so forth. You have this incredible ability to do B2B to E, which is employees, right? And sorry, I'm going to go on with this because this is like, to me, it frustrates me why I can't. And let's be honest, 90% of the workforce is actually employed by these small businesses. So that means that's actually the consumer, right? So it's a B2B to C player. I've used the word E. So you have access, you have trust, you have a lower CAC, right? You have people who have needs, right? Whether it's the end customer or the businesses, right? You have, very well established GRC. So your operating model is robust because your primary sector would not let you achieve that. But for some reason, you guys have not been able to branch out into, products like, lending, to B2B lending or early wage access to the employees, or there's a whole plethora of products. I'll keep going for this. Tell me why. As in, do you share the same frustration, or maybe frustration is a strong word, but do you share the same, I don't know, concern, whatever the word is? But what's stopping us from unleashing you guys into this area? Because to me, everybody wins.
It's definitely an area that we're keeping a close eye on, and the UAE is quite a unique market in the sense that the diaspora that we serve really in the UAE market is quite diverse. We've got people from all over the world living here. We do want to offer lending products to some of our underbanked and unbanked customers, but you also want to be comfortable knowing that there's strong regulation to support these guys, and the companies that will be offering these services to them actually are well set up to do that. And I think over time we will be allowed to do some of these services, but under very strict regulation and very strict supervision. So while we would have liked to do it much sooner, I think we will have the opportunity to do it moving forward.
So let me take this. So I think you are anticipating that the regulator is seeing this as an opportunity, and the fact that it actually serves the nation and serves the need of the nation, right? And the conversations which I'm sure you're having at a regular basis with the regulation, you're seeing that there is a shift in the mindset of the regulator to allow, I guess, organizations who have the ability to do this to do it in the future.
Yes, when I look at the sort of the customer demand and the customer expectation, customers are actually wanting to have these services availed. When we look at other jurisdictions, they've already started to allow such players, MSPs, to do these kind of services. So I anticipate in time we will be allowed to do, similar type, BNPL and credit-based lending and have credit-based products. For us, it's something that we've been looking at for quite some time, and I think we will have the ability at some point in the near future to offer such services.
No, and I hope so too, because I do think that it could be very, very disruptive in terms of the market. Not only will I think you act as a catalyst to serving the problem, but I also think that you'll bring in a whole swathe of fintechs who can then work with you, right, in terms of making these solutions available, right?
Definitely. And if I may. To me, a real financial inclusion is not just allowing somebody to send money from A to B. It's them being able to to let's say take out a loan to buy a car for their loved ones back home, take out a mortgage to to support their family. It's really bridging that gap between bank and unbanked. Real financial inclusion is when we get to the point where the term unbanked no longer exists. Everybody becomes banked in some shape or form.
Fair enough. I like that. So there's another angle I wanted to talk to you about. How many, I lost count, there's 60 plus exchange houses.
Around 70.
70.
Around 70, yes.
Why?
When you look at the market around maybe 3-4 years ago, there were 140 exchange houses. So the industry has consolidated quite a bit. We've had a few exits, and we anticipate a few more exits in the near future. And I think it's just a natural evolution. There's going to be some consolidation. There's going to be some acquisition activity. There's going to be some exits potentially. And
So are the vast majority of these they're captive exchange houses?
What do you mean? What do you mean captive?
But are they associated with the larger organization, and the exchange house just actually services the employees of that large organization?
It is very important for businesses like ours to have scale.
Yeah.
We're a high volume, low turnover business.
Yeah.
If you don't have scale and you're relying on a select few, I doubt that you will survive moving forward. When I look at the overall cost of operations going up, there's inflationary pressure as a factor of the macroeconomic environment, escalating cost of compliance. Unless you've got scale, and unless you've got the ability to consistently invest in your business, I can't see you surviving moving forward.
So how many of these 70, if I may ask, are above water?
I think most of them are actually doing okay.
Okay.
Most of them are actually doing okay. My perception is that most of them are doing okay. Will there be consolidation activity? I think there will be. Will there be exits? I think there will be. I think unless you've got scale, unless you've got very robust compliance, I struggle to see you surviving in this environment.
Okay, let's go back into let's go a little bit deeper into the world of cross-border.
Sure.
Remittance or cross-border money movement, right? So there's ample disruption happening there, right?
Yes.
And we alluded to before we started, we talked a little bit about faster payments, there's concept of interoperability, then there's stable coins. So let's pick all of these sort of independently, right? So instant payment, faster payments, whatever we might want to call it, right, is coming thick and fast, right? At least in countries like India, it's just gone berserk, right? And now UPI is obviously connecting on corridors internationally, right? So I think there's some conversation going on with the UAE. There's conversations going on with some of the other GCC nations and towards Southeast Asia. So what is the implication of faster payments on your business, right? And how do you intend to sort of respond to that?
Really, speed really depends on a number of factors. It really you have to look at your own infrastructure, your own technological capabilities, and you also have to look at the kind of relationships that you have in terms of correspondence. We operate in almost 200 countries globally, and if the receiving end partner has the ability to offer real-time payments, then that's really how we were able to offer these services. I mean, we have some of the relationships what we have now. I give the example of JP Morgan, our B2B services. In most cases, there is settlement within seconds, and a customer that used to be happy with 15 minutes, 20 minutes, half an hour, 2 hours, now wants the money to hit the account in seconds. Unless you're able to adapt, to the demand of the customers, you're going to fall behind. And a lot of these global partners expect a certain level of volume. If you don't provide these partners with volume, then they will not entertain the relationship, which goes back to my earlier point, is that you need volume and you need scale. Otherwise, you can't survive.
You can't survive. Okay, so I get that. Let's jump to the next topic, which is interoperability, right?
Yes.
So it's a great topic. Everybody keeps talking about it. I think ISO 222,
20,021.
Yeah, 20,000. I forget how many zeros there are always in this.
Quite a few.
Right. Quite a few zeros, and that has interoperability as a part of the overall standard, right? So there's two sides to the story on this. So one is saying, interoperability is awesome. It'll enhance speed. It'll increase transparency, arguably reduce cost, because that's something I did want to talk to you about. Yes. I've had some numbers banded about. I was at a conference in Kigali earlier in the year where I was actually on the panel talking about interoperability, and some of the numbers which were being thrown around was quite high. Now, that's one side of it which says interoperability is great, it needs to happen, it's kind of where we need to head. On the other hand, we have proliferation of currencies going on, right? Including a whole host of these stable coins and digital currencies and so on and so forth who's come through. And not only that, but to be honest with you, to make even these multi-chain stable coins cost effective is very hard because of things like gas fees and so on and so forth, right? So what's your view on interoperability? Is this just a great conversation point to a large extent, or is this something that we're going to actually see in its true potential form in the near future?
I mean, we've been having this conversation quite, for forever,
Totally.
for quite a long time. Look, I mean, a lot of potential in stablecoin. A lot of the benefits that you get from blockchain technology, the speed, the lower cost, the ability to ensure anonymity on the send and receive side. All these things sound great in theory, but when you get to the real application, you come across a number of stumbling blocks. I think what makes a lot of regulators around the world a little bit concerned is the fact that it's very difficult to monitor these things. So eventually, when the cost of compliance eventually catches up to crypto, and then you start to see that the gap between the traditional banking sector and the crypto tends to really go down, and it loses some of the attractiveness that you see. I'm very optimistic about CBDCs and then the kind of potential that you have there, because you're minimizing the number of intermediaries that you have in a particular transaction. Rather than having 2 or 3 or 4 intermediaries, it's maybe 1 or 2, or at most cases 3, and it's much faster than your traditional payment rails, that the SWIFTs and so on. So definitely something we're keeping an eye on. The big concern, or I'd say the big inflection point, will be once we start to see more and more regulated coins, essentially CBDC.
Okay, and I think if I'd stay in that same vein, nearly every single company which is launching any sort of financial services app first launches a money remittance solution.
Yes,
it's mind-boggling, and largely because I think they see it as a hook product. They want to launch it. Some of your international remittance players have actually benefited from it in terms of they offer their platforms for those to actually happen. Where does that leave players like you, who, if I may say, have a hybrid model, if I may use that term, where you do tend to offer the services which are offered by some of the Western players, whether it's international players, whether it's Western Union or MoneyGram.
Yes.
But at the same time, you have your own proprietary network, right? Whether that is corresponding banking network and stuff like that. So in the future, where do you see the value in this business shifting? Is it more in the infrastructure side, or is it more on the consumer facing side? Because if over a period of time, the whole concept of visiting an exchange house front end diminishes to a certain, to a level which it becomes unsustainable, and everybody else is sort of using their banking app, their super app, their whatever app to make money remittances.
Yes.
Where does a business like yours go? Which direction would you be taking it?
I think for the last couple of years, we've been implementing an omni-channel strategy. So we've got a very strong branch network, one of the largest in the local market, and we also have a very strong digital application as well. We have our own application. Ultimately, it's about getting to our customer. So, and at the moment, we still see a lot of value in having our branch network. It's still going strong. It's still growing. It's not going down. It's actually growing. It's actually still growing.
That's very fascinating, isn't it?
It's contrary to sometimes what you hear.
But why, if I may ask? Just segue away.
It's a customer preference, really. Really, it's a customer preference. Transactions are growing, volumes are growing, and it's just preferences. We have a very strong retail culture in this market. You go to the mall, you do your grocery shopping, you go watch a movie, you do a little bit of shopping, and you send money. It's just part of the culture.
No, I agree. Okay.
A lot of people use apps as well. We have our own digital application, AlphaPay, which is Al Fardan Exchange. We also power Western Union. We actually, back in 2019, we signed with Western Union a strategic partnership whereby we offer our payment rails. And I think that's the first scalable, I would say, remittance as a service proposition that was brought to the UAE market, and we've tied up with a few other fintechs as well. So not only do we have our own in-house built products, we also provide a unified API for other fintechs to come and plug in and use our rails for settlements. The Western Unions, a lot of large global MTOs will continue to operate in our market, and we see them as partners. So there is a place for players like us, and there's a place for the MTOs.
I think the future is not competition; it's co-opetition.
Yes.
I hope I got that word right. Right. Now, I think it's fascinating how the demand is sort of evolving. Talk to me a little bit about your app.
Yes.
Right. Obviously, the customer, irrespective of where they are in their socioeconomic level,
Yes.
is becoming more digitally savvy, right?
Correct.
Let's be honest.
Correct.
And obviously they're getting more comfortable with using the mobile devices, and some of them are not even using smartphones, but basic,
Yes.
basic mobile devices. So when did you start with your solution? What's been your strategy in terms of go to market? Is it been a net acquirer for you? Or is it largely been a defensive strategy where you've made sure that people who wanted to migrate out of your store environment have gone there? And then if I may ask one question, and you can choose not to answer, is what percentage of this customer base that you have, and I just want a percentage,
Sure.
are genuinely omni-channel, i.e. they're using both?
Yes.
So I'm sorry, I've asked you 3 or 4 questions in one go, but it's not the first time someone's done that to you.
No worries. We deployed our app around 3 years ago.
Okay.
And then we revamped it, and we redeployed a new version about a year ago, which is AlphaPay. So I mean, in terms of the kind of customers we attracted, we anticipated that we would start seeing some of our core customers, move into the digital channels, and some have. But the interesting part for us is that we've acquired the customers that historically were not really part of our business. So we were fortunate to be in a situation where we have growth in the brick and mortar, and we have growth in the digital. And particularly during COVID, and I've said this in the past, our digital transactions grew by 9x, and they're still growing. And it's amazing, alhamdulillah, how it's been absorbed by the market. In terms of percentages, I mean, roughly about 15% of our business happens through our app, and we anticipate that will continue to grow. And from the context of a brick and mortar or traditional store, provided it's making money, provided that it's doing well, we will keep it.
And how much of your front end is getting digitized even in your physical environment?
The actual core experience of the customer is currently largely with the teller,
the human touch.
teller.
Yeah.
We are going through a POC with the kiosk that's purely 100% automated. Does that mean that we will make do with a lot of the people that we have facing, or our customer facing tellers? Absolutely not. I think that's going to continue to be a part of our business. A lot of our customers crave, that human interaction. If they don't want to interact with people, they've got the application, they've got the website. There are other ways of getting their money transferred. We are gonna pilot a few of these unmanned kiosks and see how they're received by the market.
And how so again 2 questions, but I'll ask one and then ask the other one. So currently your AlphaPay, what does it offer? It offers money remittance and
so at the moment it's money remittance and value added services, which is consistent with the kind of services that we are allowed to offer as per our licensing. But we believe over time.
But bill payments, I'm assuming.
Bill payments, yes. Bill payments. So you cover credit card payments, utilities, international top-ups, credit cards, and the list goes on. Really, with the existing app we have, it's a one-stop shop for most of your payments.
Right, and I personally think if someone wants to actually build a financial super app, these are the platforms which are way better off to do it on, because you have a customer base, you understand what their needs are, and you can actually I guess expand it in the manner that you want to. let's talk a little bit about WPS.
Yes.
Right. It's again, unfortunately, not considered a sexy part of the world. And apologies for using that word. I couldn't come up with anything better. Right.
No worries.
Again, it serves, in my humble opinion, a very important role in terms of the society and commerce. Where do you think that sector is heading, in the sense that obviously you're processing a huge loads and loads of salaries? Where do you see opportunities in terms of expanding that business? And where is that whole sector heading?
Sure.
It's not just about you.
I mean, we're fortunate to have a very healthy, I would say WPS portfolio. One of the largest portfolios, I think, in our local market. And in the same way that you look at a bank customer, you have that customer's data, you've got that customer's behavior. And so we are, I think, very uniquely positioned to be able to add a lot of these additional value-added services that we talked about. We talked about BNPL, gold, and buying and selling, and all these kinds of other things. So the moment we're allowed to do these services, we don't necessarily have to go and develop it from scratch ourselves. You talked about collaboration. I think collaboration is the key way moving forward. There are others where where remittance is our bread and butter. BNPL might be their bread and butter, or gold trading might be their bread and butter. Investment products, insurance products. So you don't have to do everything yourself. You work with a partner who's a subject matter expert. You plug in with them, and you go to market with a diversified product.
Yeah, the only challenge being that you have built an infrastructure, right, which is capable of integrating, all of these things together, is ability to scale, and I think most importantly, it gives the consumer the UI UX which is required, right?
Yes.
In the sense, I keep going back to this conversation we have around super apps, and obviously, guys like me who can commentate on anything can say anything and get away from it because nobody holds a gun on our head, right? I keep saying that I think when I look at any super app, for me, there are two fundamental things which are very, very important, or if I may say three. One is, what's the backbone business? And if the backbone business doesn't make money, I've yet to see a successful super app where the backbone doesn't make money, right? And that's my concern with ride-hailing players who try to become super apps, because the unit economics of ride-hailing, unfortunately, globally are punitive, right? And if that's your backbone business, it's a constant form of distraction. The other is the ability to service a vast segment of customers. So you cannot be a super app for a segment.
Yes.
Right.
Yes, I agree.
Because the whole concept of the super app is that you've got to be able to work. So, which is very hard, because then your product needs to have your team needs to have that ability to segment, hyper segment, come up with relevancy and be able to build it. And then I think the third argument comes down to is the tech architecture and the tech infrastructure that you have. Does that allow you to scale, bring in these new people more efficiently, plug, play? These are easy words for person sitting on a sofa to say, but it's actually quite hard to sort of deliver. But I do hope that the regulator does see the light, and it picks a few players who have established themselves in a manner that gives them the confidence to do it, because I do think that it is nothing short of being a game changer in terms of a number of the things that actually the UAE wants to achieve. And I'll tell you, the fintech sector will gain tremendously if some of you guys who actually have such large cohorts of customers, whether B2B, B2B, B2C, talking to you, right? We talked a little bit about blockchain and stable coins. So let's put stable coins aside. Let's talk about blockchain as the underlying sort of technology, right? What are you doing as Al Fardan in terms of blockchain? Is this still wait and watch, or are they obviously you said JP Morgan and you're doing some stuff with them, and I'm assuming you're using their sort of blockchain infrastructure for B2B payments, right?
They're USD settlements, yes.
Exactly.
Yes.
What else are you doing within your own business in terms of adopting blockchain?
We've run through a number of proof of concepts, whereby we looked at setting up relationships with partners via a number of blockchain platforms. I mean, we're connected. We're connected on RippleNet, for instance,
Right.
and we're running a number of services there. We did a pilot with a partner in Nepal, on a cross-border remittance settlement, which was quite cost effective and was very fast. But we are yet to come across, I would say, a solution that is really scalable. That is really scalable, for a number of reasons. Infrastructure is expensive, unless it's affordable to the point whereby you're able to replicate a very strong network and pull these people into your network. It's very difficult to actually get it to compete with traditional systems.
Okay, fair enough. I think that is pretty consistent to what a lot of people who sat on that seat to say is that we feel blockchain is incredibly disruptive. It has all those, it gives you speed, transparency, mutability, et cetera, et cetera, et cetera. But we just need to make sure that before we make that big bet, right? We've ticked off things like scalability. We've ticked off things from a regulatory perspective if we're doing everything right or wrong. Let's come back to some of the Al Fardan exchange business questions, right? So firstly, I just was very keen, right? What are your top 5 corridors?
Top 5 corridors. Our corridor focus really tends to mimic the demographics of the country.
Right.
So it's India, it's Pakistan, it's Egypt, and some of the other Arabic corridors. It's Bangladesh, it's Philippines. Really, it's a lot of the business that we do really mimics the demographics, and also a lot of the SMEs that we service on the corporate side. Are really reflective of those demographics.
And which corridors have sort of grown more in the last couple of years? Has some sort of new corridor emerged? Might not be in the top 4 or 5,
yes,
but
yes.
So which ones have? Because that tells a very interesting story about who's in the UAE.
Sure,
if I may say.
I would say big focus and very significant growth within our African corridor, and you see that in the demographics of the country. It's an area that we've given quite a bit of focus. And we continue to see growth.
And are the dynamics of how the consumer chooses their, their chosen remittance company differ?
It does. Like within most of the African corridors, we've had a significant jump in our cash to wallet, for example, business. Wallets are extremely popular in Africa, and we've seen quite a significant jump. Within AlphaPay, for instance, you can send money to about 70 different wallets globally.
Oh, so it's a wallet-to-wallet transfer.
So it's a wallet-to-wallet transfer. Yeah. The pay-in is either through a card or cash at our counter, and we're plugged to most of the wallets globally. And in Africa, in particular, we have a very strong penetration.
Okay, that's fascinating. And in terms of, I'm assuming the bigger the corridor, the more cost competitive it gets.
Yes.
Right. So is it the sort of the Indian Pakistani corridor where it's sort of blood on the street type competition?
There are I would say unique challenges with each corridor. Like some of the Southeast Asian corridors tend to be very, very competitive. The customer is very price sensitive. Very small movements and pricing will dictate quite a bit of movement. Versus I would say some other corridors like the for example Egypt. Egypt is less price sensitive, and people are more focused on going through the formal channels. Recently, there's been some challenges with the gray market, but that will eventually disappear. Some of the European currencies, the US dollar, still we're seeing good level of flow, good level of business. Philippines, I think, is doing quite well. Indonesia is a corridor that we're monitoring closely, and we're growing quite well. It's very difficult to paint a unified picture.
Yeah, I agree.
Overall on what's happening, but overall.
But itself, it shows the complexity of business.
It's very complex. It's very, very complex.
So while you're actually quite well established in the send markets, are you extending your presence in the receive markets?
It's part of, inshallah, the plan for us moving forward. Yes.
Right. So I'm going to come back to that question to ask you about what are the 3 or 4 things that are going to be part of your sort of building blocks. But sort of before I go there, and I've got this sort of last question in terms of cross-border remittance. You mentioned literacy and awareness as one of the key reasons why
there are why there are still people who are not coming into the formal world, right?
Yes.
It's a twofold question. What is it that you, as Al Fardan, are doing in terms of increasing that literacy and awareness? And what do you think as an industry, and even as the overall sector,
Yeah.
can be done better, more, or differently to accelerate that sort of learning path?
We're actually very active within specific corridors whereby we see there's potential for more digital penetration. So we run activation campaigns with our international partners within camps, within labor areas, to try to educate people of the benefits of going through formal channels. So that's one aspect, and we engage with a lot of embassies, domestically, to try to actually drive a bit more awareness and actually educate customers. We're also looking at certain technology solutions, and I'm fascinated with some of the solutions we have with AI now, for people, for example, that are struggling with language, or are struggling to speak to or to write or to type. There are AI solutions whereby you could speak into your application, and it can actually dictate the requests of the customer. So we're looking at a number of POCs. And we're hoping that we could come up with a solution that can help address that. There is no silver bullet that will fix the issue. It's a combination of awareness, of training, of activations, and of also trying to really handhold sometimes customers to bring them through that journey. This is why I think it's important, to maintain some element of a brick and mortar business model.
Yeah.
We're always talking about financial inclusion, but the way forward is digitally led financial inclusion. That doesn't mean that you exclude brick and mortar. Brick and mortar has to be there to service the people that need it, not just have a preference for it.
No, I agree. I have a constant banter with a number of my payments friends where I said the future is not cashless, it's less cash.
Yes.
And that's if I take that whole sort of context, we're never going to be entirely cashless, because there are cohorts of people who will need cash for all kinds of reasons. So let me ask you a question. Again,
Sure.
Tell me if it's too tricky. Obviously, there's an association, with
Yes.
the money remittance players of the UAE come
Yes.
together.
Yes.
I have no idea how often, and I'm sure lots gets discussed. I'm going to just ask you a very simple, blatant question here, right? Does that federation work in a manner that it's not only trying to resolve the problems that the industry faces, but is it also coming together in terms of how do they take the industry forward? And financial education literacy is a great point, right? Because if there's 70 of you doing something together, right, then obviously the amplification of that activity is far greater. So is it a session which usually tends to be about everything which is going wrong, or are we also talking more proactively about what can we do better and differently?
We do have some very fruitful discussions on the FERG. We look at some of the common challenges that we have, and we also consult with the regulator whenever there's new legislation coming up. They would essentially speak to a number of the large players just to seek guidance and our feedback on a number of matters. We do look at some of the challenges that we think we're going to be facing moving forward, and we try to work collectively with the regulator and even amongst ourselves to try to tackle some of the challenges and really to ensure that the business model is continuing for the purpose of serving the people that need the business.
What are the 3 or 4 sort of big bets, without revealing any sort of super secret about where Al Fardan Exchange is going, that you're sort of making in terms of the next sort of 2-3 years?
Sure. Inshallah, in the next 2 to 3 years, we'll be expanding beyond our borders.
Okay.
We're going to be adding some exciting new digital products to our current offering. Wallets are one of them, and inshallah, when the time is right, hopefully, inshallah, about BNPL and some other exciting products. I still believe the business model will continue to exist for many years to come. It's just the face really, or the skin, is going to change.
Mm-hmm.
But remittances will continue to be a big part of our business, despite a lot of the the new entrants coming to our market. They are not subject matter experts. We are. I mean, they've been talking about disruption for many years now, and here we are, still standing.
Yeah, no, I don't. Yeah. So many people have written off the money remittance sector for. I've been here 12 years. As a matter of fact, the first piece of work I actually did was for a fairly formidable exchange house in the region. And there was all kinds of conversations at that time that this is a question of time where this sector goes. 12 years later, I think you guys are all there. I know some of your peers. They seem to be running a very, very fruitful business. Hasan, I want to say thank you.
It's a pleasure.
Appreciate you coming in, and I hope this conversation was interesting for you. I'm definitely sure
Thoroughly enjoyed
that
it.
there'll be a lot of people who will have, for the first time, sort of heard a conversation with someone from your sector. I think that's part of it, right? I think your sector needs to come out there and talk a little bit more. I'm going to be with some of your colleagues in India in a couple of days. Where apparently I'm supposed to be talking about interoperability and instant payments on cross-border payments for MSMEs. Maybe I'll send you a note to give you some tips on what I should say. But thank you. Thanks a lot for coming.
Absolute pleasure. Thank you for having me.
So, ladies and gentlemen, that was today's episode. I had Hasan Al Fardan, who's the group CEO of the Fardan Group. I think we talked about a topic that doesn't get talked about a lot. And I did put him on the spot a few times. I hope he's not going to hold that against me. But with that, goodbye and until next week. See you.